This is Miles Crawford, and welcome to the TRAC Staffing Podcast. There is a lot of misinformation and misunderstanding that surrounds the staffing industry as a whole. So, we wanted to dedicate this channel to discuss all things staffing. We'll discuss the good, the bad, and the ugly. And I hope you find the information we discuss here valuable. It's meant for you.
So let's get started with, I'm wanting to address the future of the industry, and I think the best place to start is our outlook for the current political climate with the changes, the elections, everything that just happened here at the end of 2020. So what sort of shakeups can we initially expect that look likely? And I was able to participate in the webinar you put on recently covering a lot of this. So I'm kind of briefed on it, and it was great. And anyone listening to this, I would recommend to also go check that out. Had a lot of good intel, but just kind of lay for us what we can reasonably expect as far as the landscape of staffing with the new political climate and 2021 coming up.
Sure. So, it's a very interesting question. I think when we look back to maybe even the beginning of this year as the nomination process was playing out, I think it was the staffing industry was very concerned in the beginning with some of the candidates that were looking to make headway for the Democratic nomination as far as a potential challenger to President Trump. And, I think it was clear that once COVID hit and that race kind of took a turn and the former Vice President Biden became the front runner, Wall Street, the business community, including the staffing industry, I think everybody took a deep breath and said, okay, now we've got two candidates that, I think are going to be okay for the industry, regardless of what happens. That was the first thing. I think that the way that the election played out itself was very interesting because the one thing that did concern us was the fact that former Vice President Biden, President-elect Biden, has a very strong following of organized labor. He is a longtime supporter of organized labor dating back to his Senate days back as early as 1972. So we knew that there was going to be a very big presence of organized labor in the campaign, which there certainly was. And we knew that if he was able to be elected president, that there was going to be certainly some presence of organized labor within the administration. Now, we haven't seen yet, I think as far as the industry is concerned, obviously the cabinet position that affects us the most is Secretary of Labor. We've not seen who that pick is going to be yet. Now, of all the nominees that we've heard about, they all have, as you would expect from the president-elect, a very strong backing of organized labor. One of the potential nominees is the current California Labor Commissioner. One of them is a congressman who is a former organizer for the AFL-CIO. So you knew there was going to be a labor presence there, and we're certainly seeing that, although we don't know who the nominee is just yet. So of course there's going to be, areas that is not ideal for the industry. But I think that having said that, certainly the president-elect appears to be tracking on a more moderate track than some of the other potential nominees were back in the early part of this year. I think that the industry is poised to do great things in 2021. These kind of downturns, and obviously we've never seen a downturn like this, but this coming out of an economic downturn is where this industry is at its best. It gives employees the chance to get back into the workforce, gives them chances to get to jobs quicker than maybe they otherwise would get to them. It gives businesses the flexibility to add to their workforce without taking on so much extra cost and burden that they are prohibited from doing so. Obviously, you know all this, you're in the industry, and I'm sure you talk about this with your clients all the time. So I think that the industry is really poised for great things in 2021. I think we're finishing up 2020 very strong. It'll be interesting to see how some of the other cabinet picks play out. The trade representative pick will be interesting. And of course, what we're really looking forward to is seeing as the Biden administration gets sworn in and starts off and the 117th Congress kicks off, what legislative items will be brought up for consideration. I think that's the next kind of piece of the puzzle that we're going to be anxious to see. But I think good things are ahead for the industry.
Okay. Well, I'm definitely glad to hear an optimistic outlook on 2021. Coming out of a recession and economic downturn, you can see the opportunities that staffing firms could be well positioned, I think, to take advantage of. Even coming out of that, I feel like so many other things that our industry is really going to have to take serious and start preparing for. So even though we may have some good times coming up that hopefully we'll be able to take advantage of and help to bolster the industry as a whole and rising tide, all of that, we're still faced with the aging workforce dilemma. We're still faced with a declining growth rate population. I'm fully convinced that the pandemic is going to prematurely remove a lot of workers from the labor force entirely. So while we may see our unemployment rates going down, I think that that number has a lot of asterisks next to it, as is anyways, with the way it's represented of the workforce data. So I'm kind of concerned that maybe the main barrier to overcome is going to be access for labor, even in our industry.
That's a good point. I think it's something we've been fighting for a couple of years now. I mean, we look back to 2019 and even the beginning of 2020. It seems like so long ago. But less than a year ago, we were talking about states that had less than 2% unemployment. Just historic numbers that we had never seen before.
Yeah.
We were talking to members who had thousands of open jobs because they just could not find people to work. We heard stories from members about employees that would, interview on Friday and be set to go on Monday. And in between, they'd get 4 other job offers because the market supply was so short. And that's a story that continued even into the pandemic, because as we started off in March and everything was so drastic, and in so many states, things were shut down, and there was so much time in that first kind of 6 weeks figuring out what was going on, what could we do, what couldn't we do, where could we do it, that, pretty much by late May, early June, we started to hear back from people, well, things would be okay if I could just get people to go to work. And it was a couple things. It was people were obviously concerned about COVID, but the unemployment benefits with the $600 pandemic payment, weekly bonus on top of your state payment, for many people was pushing them well above what any staffing firm or other employer could pay them.
Yeah.
So we heard lots of stories about staffing firms that were placing people maybe before the pandemic at $17 an hour. Pandemic happened, maybe 8-9 weeks later, client was back online offering that same position for $20 an hour. And that person was making $24, $25 an hour on unemployment with the pandemic payment without having to risk going back into the workforce. So that was a problem. And that's certainly a problem that we continue to face. As things, quote unquote, get back to normal, I agree with you. It'll be very interesting to see what happens with that labor force. Right now, we still have a lot of places where, for instance, in Virginia, schools aren't open. My kids haven't been in person in school since March. So you have a lot of parents that can't go out and work because they've got kids at home going to school. So you need to get kids back in school. You need to get people feeling safe about going back out into the workforce. You need businesses to feel good about what they're doing and not scared about, potential lawsuits if things were to happen. Once all those things get figured out and we start to see kind of more normal activity, then it will be interesting to see, does that potentially some of the older workforce? Does that workforce come back, or are we going to be stuck in another round of we have too many openings and not enough people to fill them? Now, I will say that in a lot of cases, some areas, one of the areas where a Biden administration will be helpful is I think that the president-elect's approach toward employment immigration issues will be much different than the current administration. And I think that you will see, whether it's nurses or doctors or H-1B visas, or even just the good old-fashioned standard green card issues, I think you will see a more uniform kind of back to pre-2016 immigration policy that employers will find helpful, especially those areas where they're finding it really hard to fill jobs. So all these things will be interesting to see, and they'll need some time to play out. But again, leading into right before the pandemic, I think the industry's biggest problem was lack of labor and just really trying to find ways to find people to take these jobs. And I don't see that changing anytime soon. I think that will continue to be a major issue for us.
Yeah, it seems like workforce development initiatives are more and more and more coming to the forefront of a lot of people's minds. I know some of the more, pioneering firms in staffing in the U.S. that I've had the pleasure of talking with, a few of them, Hamilton Riker, Madden Industries, just to name a few that I've chatted with on this podcast, actually. They're sort of diversifying their offerings. They're investing more in bringing additional value outside of just a source for labor. I think there's a lot of merit to that idea. I think there's been so much ever since WIA, was overhauled with WIOA with the Obama administration. There's just been such an onus on workforce development, and that's reactionary, unfortunately, like most policy is, well-intentioned or not. Most of it's reactionary, but they're trying to solve the skills gap. They're trying to upskill people so that lower wage individuals can grow and advance in their careers, and they're trying to do that sort of organically to fill positions. I love the idea of it. It's an age-old concept. Historically, a lot of times unions were the ones that pioneered apprenticeship type programs in U.S. labor. They've kind of been the one that you always think about. Less than 7%, I think, of private employment is unionized under union labor. It's a little bit more than that in the public sector. But with unions playing a smaller role, granted, that could potentially change. Everything I've been reading about Biden administration seems like they've placed an emphasis on good union jobs, I think, are the three words that run in sequence every time I talk about, or I read about some of the employment initiatives. So there's a couple of things in that that I want to kind of get in with you. So, one, could we potentially see staffing firms diversifying, investing more into upskilling and partnering deeper levels, creating stronger relationships with clients to offer more value add, upskill, training, services along that? And do you see that as more of an anomaly or a potential opportunity for our industry?
Oh, it's an opportunity. I think it's already happening, as you pointed out. I think you're seeing staffing firms that want to be a partner, with their clients, and not just a place where they can find people to work. And whether it's being an overall solutions provider, or whether it's just being in a position where they understand their clients' changing needs and are able to adapt through education programs that they offer their employees, so they always have that kind of supply of talent ready. One of the companies you mentioned that you've talked with, Hamilton Riker, we're famous. And in fact, I want to say it was 2018, their CEO, Kelly McCright, testified before a Small Business Committee in Congress about a program that they had developed where they created a virtual training program for a forklift driver. So my kind of crude understanding of it was, if you wanted to get somebody, if you were a client, you needed a forklift driver They had to be certified at a certain level before they could come in. And a lot of that testing had to be done there. So you had to have somebody come in and they had to, learn on the forklift, and they weren't necessarily doing things for you as part of the price you paid for having these people come and work for you. And so what Hamilton Riker did was create this program where by the time they got done with the program, they were 85% done to being certified for learning how to drive the forklift. So instead of going to the client's site and spending 4 weeks learning how to be a forklift driver, now they were, 4 days in, they were ready to go and work. Right. And those kind of things. We've heard other things where we've heard of members, building training facilities where they just could come in and they could come up with their own programs and train people to do forklift jobs or whatever the jobs may be, where they can get people and get them trained and get them out where they're most needed. And again, these are really, really good paying jobs that people want. And I think, the skills gap, which has been the kind of the buzzword for the past couple of years, I think everybody's recognizes that's something that the industry has to continue to attack. And, when a staffing firm, finds really good employees, the attitude seems to be, let's keep them, let's do what we can to, as you said, help them advance in their career, help them do different things, make them even more valuable to the client they're working in. And that just is another way that they're developing their overall relationship with the client.
Yeah.
And I think that for those firms that have those relationships or have good relationships with the client, the overall labor market shortage is such that you're now, while staffing firms may have always been pitching themselves in that way to their clients, clients now are starting to come to the staffing firm and realizing what a valuable partner that they have there. And they're starting to push the conversation about, well, what are the ways can we utilize this partnership? Can you sent us over 5 people that you trained so well. Can you do that training program and cover everybody else in that sector, whether they're with you or not? Can you do all these other things? And I think that's a really interesting area of growth of partnership that we're going to see in the coming years between staffing firms and their clients, big or small staffing firms.
Now, and that's one thing I talked with Sherry Franes, who joined me from Hamilton Riker, and we chatted a little bit about what is sort of that critical mass. What's the size that an agency has to be to feasibly be able to make that investment and do it well. So there's definitely some growing pains and some things that we still as an industry need to work through. But I echo that sentiment. I think we need to evolve. I think we need to adapt. Otherwise, I think too many firms won't make it. Historically, the way we've done business, I don't think is going to be successful in the next 5 to 10 years for all the reasons we mentioned. The potential advent of automation, increasing productivity without having to grow your labor force. We're becoming more efficient. And historically, a lot of staffing firms have been in that manufacturing and in that blue collar. And if those are the types of jobs that a $15 an hour minimum wage increase could potentially put in the crosshairs of, now automation may make sense in some fashion. I think we sort of have a perfect storm and a time clock, a time bomb rather, that's ticking, that our industry really needs to get in front of a lot of this stuff. Because there is a role to be played in the future for our firms, but I think it's going to require innovating, partnering, as opposed to just servicing, becoming a key labor vendor for customers, and all the facets of whatever that could entail. I think there's a lot of growth opportunity and obviously revenue and expansion and everything else, especially with the funding that the previous administration and I think future administrations will put into workforce training. It's going to take a lot of insights, I think, and well thought plans, but I think that is a strong path forward against the way to insulate ourselves against a lot of those sort of looming threats. And to tie into that, once again, training programs, they don't have to be apprenticeship programs. Those have pros to them. They have cons. They have, like anything else, there's good, bad, and ugly about them. Historically, like we touched on briefly ago, unions have been the pioneers of apprenticeship programs. With this new administration's focus on good union jobs, can we anticipate, historically, I don't believe unions and staffing companies really played well together. So what can we anticipate that relationship to look like, or how can those roles, if staffing is kind of trying to just switch to be more of a value-added service with training and upskilling and things of that nature, do we see a collision course with those two? Or once again, with the private labor market being less than 7% unionized, I don't know how much of a Don Quixote windmill type, fear that may be, or if there's a legitimate conversation to be had moving forward.
Well, it's interesting. We've had a very trying relationship with organized labor for as long as I can remember. Temporary staffing employees are historically very, very hard to unionize because, quite frankly, they're temporary. They're not there for a long time in most cases. In other cases, as we know, a lot of people that take temporary jobs are either using it because they want it to be a springboard to something else, or they're using it because they're looking for extra money. And so they're not going to be the kind of people that are going to say, yeah, I want to do this and I want to, more benefits and I want, all of these things that come with union membership. They're looking for the most hours of work at the most pay. And so they're not an ideal candidate for organization. I think that if you talk to organized labor, a lot of times they would tell you they think that they think the worst of temporary staffing companies because they feel like that the use of temporary labor costs them jobs and costs them membership. I think that, they like to paint the picture of temporary staffing companies as those kind of rogue, companies that don't follow state law, they don't pay taxes, they don't do all these things, which are
caricatures of bad actors that have existed, but generally aren't prominent.
Right, they're not prominent, certainly not involved at the association level. We don't have bad characters joining ASA because they have no need for it and they don't want any interest in it. We have companies like yours that are looking to do the best that they can do for their employees while complying with all the laws, knowing what they need to know so that their clients are complying with all the laws. So, it's an interesting situation because, we really don't have a lot of interaction with organized labor because, again, their temporary employees are so hard to organize, but we do seem, they are no fan of ours. We know that there was a bill introduced in the Senate back in September, which was introduced on the behalf of organized labor, which really would do a lot of damage to the industry and the people that it employs. It would require a national registry. It would require fees for every branch office that a staff firm operated. It would prohibit the use of conversion fees for most employees. It would just do a lot of things that would make staffing companies not be able to operate the way that they do and not give opportunities to the people they give opportunities to. Now, having said all that and being kind of negative, hope always springs eternal, right? And I think that as staffing firms continue to create more partnerships with their clients, if organized labor looks around and sees that staffing firms are helping the people that they're concerned about, which are the employees, by training them, by giving them opportunity, by giving them the things that they need to succeed. Maybe somewhere down the road we can have conversations with them. The interesting thing will be to see how in all of this new way to work, this new workforce on the horizon, which we call, kind of the gig economy. What happens with that, where you don't have any employer? You've got somebody who, my nephew, who is 29 years old, who has a full-time job, works 40 hours a week as a recruiter, actually, lives outside of Miami. And before COVID, every weekend when there was something big in Miami, if he was around, he didn't have any plans, had nothing to do, he would throw on his Uber or Lyft switch and drive for 30 hours during the weekend and make a bunch of extra money and be done with it. And he thought that was perfect. We've seen in California, how are people going to start dealing with the DoorDashes of the world and the Uber and Lyfts of the world?
Yeah.
Staffing firms, one of our biggest missions and things that we need to continue to do is continue to educate not only organized labor, but legislators on the state and federal level that staffing is not gig. A lot of people use all those terms kind of interchangeably, and as there could be nothing farther from the difference between a staffing firm and a gig worker.
Yeah. Well, that brings up a couple of interesting points I actually had jotted down here to go over with you. One of them, organized labor has made a move in contractor spaces. I know they've tried to encourage organization with freelancers. I think even Uber they attempted to organize Uber and Lyft and some different drivers like that on the contractor side. But there's an interesting statistic between 2005 and 2015, 94% of all net new jobs created were temporary, gig, or independent contractor. So what we're seeing, in my opinion, it clearly is indicating a shift away from the historical W-2 employee-employer relationship. Like, more work that's being created is now being created in finite scopes or limited projects and bid out for fulfillment to, the ultimate form of division of labor to contractors, to specialty firms that contract and work within that scope on that one finite project and service. And it seems like with the growing nature of technology and Moore's law and how quick everything's advancing, seems to me that a lot of this new work and a lot of new money and a lot of new economy and the gig economy is really going to change the way everybody works, which I think is another thing that staffing firms need to be cognizant of moving forward as they plan. With the Affordable Care Act, and from once again what I've read, that Biden's administration is looking to expand and reinvest in the Affordable Care Act, and we know that has some impacts on the staffing industry, that historically we haven't had to carry that cumbersome of healthcare benefits for a temporary type employee arrangement. But whenever you do that, you almost incentivize more work to be created and bid out outside of the employee specter, because now hiring an employee is becoming more and more expensive. And it's sort of a deterrent to, what we have considered orthodox employment in the U.S. And so I'm not, maybe not concerned is the right word, but I'm very curious what impacts that is going to have for our industry. If we're historically, a co-employer, and largely work is being created outside of the confinement of an employer relationship, what does that do to our industry? We have some online platforms such as Upwork, Fiverr, just to name a couple. There's no shortage of them, and there seems like there's new ones every day that is just made to facilitate contract labor. And there's a lot of work to get done there. A lot of companies that maybe historically perform that in-house now just have a project manager or an HR or procurement or a VMS even just outsourced. And it seems that's the way that work is shifting and evolving. So with that trend, and for all I know, maybe it was just accelerated based on the right environment, the right time, the right creation of new technologies in a time where they could accelerate to allow that trend to take place. So, maybe 05 to 2015 is too small of a sampling to say that's ultimately the trend and the rate that we're going to continue to grow jobs. But a lot of jobs are being created in those sectors. So I'm wondering, the new social contract has been a conversation I've tried to follow. And that conversation is about as convoluted as the people that are trying to have it, with social safety nets and workers' protections, because the gig economy is kind of the Wild West right now. There's not a lot of that. I think there might be some value to staffing being able to once again adapt our model in service of those growing trends, to be able to almost be like labor brokers on a new plane that can help be a part of the solution for those workers that are currently employed without those protections, without even paying Social Security in, let alone having unemployment in case they go 6 months without being able to successfully win on a project bid. All of that to say, I'm kind of thinking out loud here. Does ASA have any intention of maybe exploring, or have they explored, or know of organizations that have sort of been following what the developing trends and the shift of work and
yeah, no, it's a great question. There's a lot, first of all, the joke always is, in DC, there's a coalition or association for everything. You can't swing a dead cat without hitting some sort of, coalition or group that's gotten together, or association. And actually, there's a very, very successful, relatively new coalition that we're a part of, ASA, called the Coalition for Workforce Innovation, CWI. And they're all about this kind of third way to work, and looking for how best to deal with, work with, advance this new way of work that has some sort of social protections for the people that are working in this arrangement, whether they're independent contractors, whether they're strictly pure gig workers, making sure that there's something for them that works for them and also works for the business community as a whole, because that's really important. You don't want to penalize or make things so lucrative for somebody that chooses to work in the gig platform that you've got people leaving the W-2 world to go that way because they feel like they can get a better deal. So it's a matter of making sure that there is a safety net there, there's a protection there, but that everybody's kind of treated fairly and that there's opportunity for everybody. I think that when we talk about, the employer-employee relationship, and no doubt it's changing, I still think that, for the staffing industry, that relationship is really important because it gives the clients the peace of mind that they need when dealing with third-party workers.
Yeah.
As much as we talk about the gig economy and everything like that, I mean, it's still a fairly significantly low amount of the work that's out there and the revenue that's out there. And quite frankly, it's because it is such a, as you said, kind of wild, wild west. Are there laws? Which laws apply? Who are they? What state are we in? You have a lot of companies, especially your larger corporations, that they want certainty. They want to know that what they're looking at is what they're looking at, and that they can then plan for it. So when the staffing firm comes in and says, all of our people that we send to you are our employees, they're all covered by federal and state employment law. All right, we pay taxes on all these people. All of these things that you do for your employees, we do for our employees. The only difference is that we send our employees to work at your place, your location, your factory for as long as you need them. And that's still a very, very valued mindset on the part of the client. They like that security. They like knowing that. So it's going to be a matter of, and you talked about it in just a few seconds ago. I mean, technology, no doubt, has been the greatest change agent in all of this. I started working at ASA back in 2003, and I remember some of the first legislation that we were dealing with. We tried to get a written notification provision amended to say that they could, that the employer could send a notification by fax or email. And we were told by the legislators, that's discriminatory because there's a whole bunch of the population that doesn't have email. There's a whole bunch of the population that doesn't have fax machines. Now, we would say, when the bills come out and say you can email your written notification, we would say to them, email's useless now. I mean, if it's not coming in on their phones, most of the workforce from the age of 18 to 40, they're just not looking at it. They're just used to getting everything on their phone. So we need to be able to send text messages to people. And everybody's got a cell phone, right? Everybody has a cell phone because they just need it in their day-to-day lives, whether it's because they're away from their house doing things, they need to be in touch with their kids all the time. I can remember just when we had our first child, and I remember being like, she's never going to get in this cell phone until she's 21, and that's just and then you realize how quickly off base you are on that, because she's at practice, I'm over here, my wife's over here, she's got to call us, she needs that cell phone, right? So these are the tools that they have, and we need to be able to continue to use what our employees or potential employees use to get them out there. Eric Gregg, who's part of the CEO of Clearly Rated, who does a bunch of work with staffing firms and how to be the best kind of customer service agent provider of their services that they can be, will always talk about that whenever he surveys temporary employees. It's just, everybody's got to be able to get everything on their phone. It's got to be on their phone. So just in this past 10, 15 years, the way the technology has changed is going to be. So you're seeing things like staffing firms starting to say like, well, we're not a gig, but can we build some sort of platform that gets these jobs out even faster, or our people can, and if I call you up and hey, Miles, your assignment's up at the end of the week, but go on our portal because maybe there's something that you can start on Monday. You go there and you find something. Not only does that keep you employed, it keeps you with us. It keeps you off the receiving UI benefits and being charged back to us. It's just a way to keep everybody employed and working. And so, as much as we talk about being a partner for the client, we also have to be a partner with our temporary employees and listen to what they're telling us they want and need and give it to them.
Yeah, I'm a big believer that the companies that'll stand out in the coming years, especially, are going to be the ones that minimize the friction for candidates and new hires and switching and assignments and whatever that may look like. I think platforms are an integral part of that. I've been exploring some of those ourselves, and I don't see a way around it to stay competitive with the change of pace and the speed of everything, and how quickly you have to disseminate information, and how much information we have for a new hire each time they start a new position or onboarding them, from the training to whatever it may be. There's so much information that has to be so quickly disseminated. You have to be sure they get it. Like you said, email, notoriously low open rates. I would like to think that I write very intriguing newsletters, and I have like a 18% open rate on some of my more successful ones. So, and we have email campaigns where we send out weekly job lists, and that's to our workers. It's maybe a 6% open rate. But the workers, just to your point, they don't really live in the email anymore. And most of the email boxes I see on even my friends' phones, they've got 90,000 emails that they haven't. And it's like, man, just delete that and start over. Like it's a fool's errand to actually think that's a legitimate form of communication. So the text messaging, The little push notifications, I think, have some merit. I wanted to ask specifically the Coalition for Workforce Innovation that you had mentioned earlier. I think that was the name of it.
Yep.
What is specifically ASA's interest in being a part of that, other than maybe just information gathering and kind of keeping a thumb on the pulse?
Yeah, it's a really, really good question. We've been on the executive committee for the past couple of years. And it really is that. It is kind of a combination of really wanting to see what this group is going to do and what this group is advocating both in Congress and in the state houses, but also making sure that there is a very clear boundary set between gig, staffing, traditional employment, because we just think those distinctions are so important. And the players of this group, there's a couple of staffing firms that are involved in it. Then there's groups like there's a trade association that is the Direct Sellers Association. And they represent kind of like the old, Mary Kay Cosmetics and things like that are true independent contractors that are selling, one-on-one with stuff that they get, making their own schedule. And then there's, Uber and everybody else in between. So it's really kind of a, if I could, it's probably a little bit overboard, but it's a little bit of a keep your friends close, keep your enemies closer kind of homage to the Godfather there, where you're saying, we want to understand what you're doing, and we have a very vested interest in it, but we also want to understand and make sure that you're not inadvertently doing something to undermine the industry.
Okay. Yeah, no, that makes sense. About the future of the industry, I wanted to chat with you a little bit, specific industry sectors. Once again, reviewing kind of the Biden platform coming through there, looked like there was going to be a very generous investment into U.S. infrastructure for, construction. Had hundreds of millions, maybe 500 billion. I can't remember the numbers, but lots of money. Do we have any sort of vague crystal ball idea of what industries can expect some federal government sort of stimulus, and where staffing could be ready to take advantage of that on maybe an industry basis?
Yeah, it's interesting because I think I'd say heading into the election, maybe a week and a half before the election, I think that most political insiders were thinking that we were going to come into 2021 with a House of Representatives with an overwhelmingly Democratic majority, probably around 50 seats. A Democratic Senate, anywhere from 2 to 5 seat majority for the Democrats in the Senate, and a Democratic president. And so leading into that, there was all sorts of these grand stories about what was going to be done and what could be done. And you were really going to have to, as a Speaker of the House or President, prioritize what you wanted to do because there's going to be so many things that you could do. And so now what we've seen is a Democratic elected president, but you still have a Democratic House of Representatives, but the Democrats are on pace to lose probably about 10 seats. And right now you're looking at a House of Representatives that's going to be a Democratic majority of about 12 or 13 seats, which is fairly narrow. And you're looking at a Senate that best case scenario for the Democrats is a 50-50 split, where Vice President Harris would break the tie. So my point in going through that is you've now shrunk down your list of possible things to like that, because you're going to have to, getting it through the House is not going to be a slam dunk, because you can only lose, if you're Speaker Pelosi, you can only lose 6 of your members before you start to panic about losing the vote. And if you are working with the 50-50 Senate, you know that you have to keep all 50 of your members in place to have a chance. And by the way, 1 or 2 switches, now it's done, and you may very possibly not have control of the Senate at all. There's 2 Senate seats in Georgia that have a special election next month. It's about 4 weeks away that'll decide the control of the Senate. So as terms of, now all of a sudden, one of the things that everybody was talking about leading into the election was, well, what's if Vice President Biden is elected president, what's he going to do with Obamacare? Is there going to be a public option? Is there going to be Medicaid expansion even further? What's he going to do to put his imprint on the healthcare law that he helped create under President Obama? And now I think you can say, well, anything that he does is going to have to be very, very specific and measured, because he just doesn't have the votes to expand this greater than he wanted to. So anything in healthcare is going to have to be very focused. Infrastructure is one of those areas, even as ridiculous as this political world has become in the past 10, 15, 20 years, infrastructure is the one thing that kind of brings everybody together. And it's simple. It's like everybody drives, everybody goes to work. Doesn't matter if you're poor, doesn't matter if you're rich. You're driving over the same roads, the same bridges. Maybe you're waiting for the same train. When I grew up and I went to high school right outside of New York City, and I took the train into school. That was how we got to school, was on a train. And I would get on the train, you'd have 100 kids going to this all-boys school, and there was, Wall Street lawyers to janitors that were going down to work the buildings down in New York City. And everybody was on the same train, going over the same path. So infrastructure has always held that kind of bipartisanship that really can get done through this Congress, whatever the makeup may be. And I think most people agree that it's time that it needs to be done. There's a lot of work that needs to be done. There will be pressure from organized labor not to allow alternative workforces in on some of these projects. Yeah. That we saw that back during the Obama administration when talking about apprenticeships. Staffing firms weren't allowed to participate in a lot of the apprenticeship programs under the Obama administration. I'm sure organized labor will have a comment and will be pushing for that as well, because they'll see a lot of these jobs as potential for their employees, union employees. And there certainly will be a lot of work for union employees. But our job will be to make sure that they don't shut out non-union employees. They don't shut out temporary staffing firms from being able to staff those jobs. Because quite frankly, we talked about, there's just not going to be enough people. And if you're working on some major projects in a state that is being, that is a federal project, you're going to need the people to do the job. And that's where we come in. So I think construction, I think industrial staffing could certainly see some very positive things from the administration with regards to if there is a large infrastructure project that gets put forth. We've seen it in the past, and no reason to think that we wouldn't be able to see it again in the future. Our healthcare folks, same thing, right? Healthcare staffing during the past 9 months has been kind of all over the place depending on what you're doing. If you're doing per diem nurses and doctors, your demand has never been higher. But on the other hand, with so many states suspending elective procedures during the pandemic because of the health risks or because of the lack of hospital beds, we've had a lot of healthcare members that have been down and have not done well. But obviously the pandemic and the health-related instances are going to continue into 2021. And if we see, one of the things they're doing right now is discussing a new stimulus package they're going to try to enact by the end of the year. Anything that injects money into the economy and helps businesses keep their doors open, whether it's additional PPP funding to let small businesses stay open, anything that does that is going to help the staffing industry. just because, we work with all businesses, right? And so you then get back to that point of, if you've got a company, if you've got companies that are getting the stimulus money and they're getting ready to, kind of rebuild things and get going, they're not going to be, they're going to probably hire back some key people that they had to let go, but they're going to need more people than they want to bring in on by themselves. And they're going to look for temporary staffing to help them, fill those positions and get them up and running so they can start doing what they do and get back to where they were before March 12th happened.
How do we see the next round of potential stimulus shaping up? What is, and I know once again you discussed this a little bit in your webinar with the information you had that you put on recently, but what are some things that we can reasonably expect that both sides seem to be in rare agreement on?
Well, here's the most really, being involved in politics or watching politics is really, really, really frustrating most of the time. And one of the interesting things during all of this has been when you're trying to put together a big package, a big legislative package, the thing that never gets pulled out and done separately is the thing that everybody agrees on, because both sides want that to be in the package at the end to bring people in. And I'll give you an example of what we're talking about. The PPP, Paycheck Protection Program. Everybody thought it was, most everybody thinks it was a very successful program. It did what it was supposed to do. It helped businesses stay open by giving them money to pay their workers when maybe they were struggling to either get accounts receivable in or their clients were down. It helped them keep the doors open. Wildly successful, and it was one of those programs, it helped the employers, but it directly helped the employees because the employees are being paid. Everybody's been saying that there needs to be another round of funding for the PPP, especially for the smaller businesses, right? It's very important. Why not just pull it out and do it separately when we're arguing about this other stuff? Well, we can't, because if we do that, then we lose support for the bigger picture over here. Yeah. So I think that the PPP program being, reauthorized for, $200 million or whatever the case, $200 billion, whatever the case may be, is going to be very helpful, especially if it happens right around the holiday times. I think especially, and for the industry as well, I think you're going to see some very targeted relief for the airline industry and maybe the hospitality industry. We certainly have a lot of people that are employed in those areas. That's going to be very important. From a broader perspective, there has been a huge need for state and local aid, which has been caught up in a political game of whether or not the problems that the states are having has been brought about specifically by COVID, or were there problems beforehand that now COVID either made worse or people are trying to dress it up. So for example, people that are in favor of giving states federal aid are saying, look, COVID came, shut down these businesses. We've been focusing on the businesses and the employees as we should, but let's remember the states are losing all this revenue, right? My wife's family's from Louisiana. Tourism just destroyed, right? So all these states that depend on tourism aren't getting that money in there, right? Bowl games are being canceled. All these things we're hearing about. So states need this money because they've been just had revenue stripped for the last 9 months. People that are opposed to it say, well, really what's happening is states have been spending way too much. They've been running deficits for a while, and now they see this as an opportunity to basically get money in to cover up their past mistakes. I think what we finally done is we finally reached a point where we realize that states need money, and states and local governments are going to get money. I think it's going to come out to about $160 billion. That's important for this reason, for all businesses. States need money, and the only way they can get money especially when you can't depend on people coming in and tourism like that, is you get it through taxes, right? And so states' initial reaction is going to be, we need to tax businesses. We need to get more money, and you go where the money is, and that's what businesses are. If the states get some funding from the federal government to kind of smooth out the edge a little bit, give them a little bit of breathing room, they're going to be less likely to turn and place a huge sales tax or an income tax increase on businesses. They're going to say, okay, this is giving us some breathing room. Let's let the businesses get up in order, because if the business can then come back and generate the sales tax revenue through the way they usually do it, which is business and volume, then everybody wins. So I think that is going to be very important, and kind of a more of a 30,000 foot level for businesses, is getting some state and local relief. So states and localities don't overreact, because as you know, if they go out and just slap a new sales tax on businesses, or increase the income tax, or do other things through fees or licensing fees or whatever, it's just going to hurt businesses more and hamper their recovery as they're trying to come out of this.
With that we've been running a pretty high debt ceiling for some time now in the U.S. Obviously, this is kind of more money that we're going to be tacking onto that. What are the plans, if there have even been a consensus of thought given to recouping those funds in the future? I assume, once again, it's the way a government generates revenue is taxation. So where can we expect some tax policies on the federal level to maybe be amended or adjusted? How would that affect our industry? Is there any light on that yet?
Not so much from the federal government. I'm sure there's been thousands of hours of conversations about it, but I think everybody still realizes that the federal government's job is not done with getting people out of this yet, and they still need to play that role before we then go turn and say, okay, how do we fix this on the other end? One of the things that, one of the issues that's going to come up sooner rather than later, as you know, states have UI trust funds that are funded by employer taxes and employee taxes that pay out UI benefits. And every state has had to borrow billions of dollars from the federal government to pay for these, 9 months of unprecedented benefits. And pretty soon, they usually get, I think, 2 years of paying back the loans before they're charged interest. And then the employer gets hit because they lose part of their FUTA deduction. States are going to be paying back these UI loans for years and years and years, because they just came so much so soon, so quickly. There's been a lot of talk about, is the federal government going to go in and even kind of maybe relieve some of those loans? What is the federal government going to do? If you remember in the fall, beginning of the fall, President Trump announced that he was directing, employers could stop withholding employee payroll tax. But it was just till the end of the year.
Right.
So it wasn't payroll tax forgiveness, because he couldn't do that. That's needed to be done by Congress. It was just kind of like we'll postpone it for 3 months.
Right.
And so Congress is going to have to decide what to do about that. Are they going to turn around to these people and say, okay, I got to pay it back? Or are they going to forgive that? So they're still in the mode of, still trying to figure out what they're going to have to do. And again, they're the federal government. They got more time to play around with it. It's really going to be the state governments, to your point, that are going to have to turn around quicker and say, okay, now what are we going to do? Like, we're starting to get out of this. Yeah. Things are looking better. What are we going to do? And we saw this back in 2008, 2009. The problem is going to be, like anything else in life, you caution against doing too much too soon. And one of the things that I remember from 2009 was Hawaii got absolutely slammed with unemployment claims during that recession. And they responded the next legislative session by, increasing by 4,000% what the employers were going to be charged for with regards to UI payments. To the point where they literally within 3 days had to call a special session of the legislature to undo the law that they passed because it was just so bad.
Yeah.
So, states are going to have to be very tempered. It's a very fine line, as you know, in business, between we've got to start looking for new avenues of revenue and we need to start paying some of these things. But, every economic recovery is fragile in the beginning, and it doesn't take much to undo that. So I think as federal and state lawmakers and regulators and administrators work their way through this, it's going to have to be a program of very measured response. Now, again, one of the things we heard about from President-elect Biden back on the campaign trail was that he was going to undo a lot of the Trump tax cuts of 2017, including bumping up the business tax rate from 21% to 28%. That's probably not going to happen now because he doesn't have the votes in the Senate, and he can't do it through reconciliation. So, there's going to be a
motivation for the federal government looking at potentially legalizing medical cannabis, at least. I mean, talk about new revenue streams, and I just saw a bill proposed or passed the Senate recently.
It's really an interesting question, and there's a lot of people in the pro cannabis industry world that are wondering what this administration is going to do with regards to this growing effort of legalizing cannabis across the United States. There's a bill called the SAFE Act, which basically is allows money from the cannabis industry to be held and dealt with by banks. So right now, and we hear about this because actually cannabis is an industry that a lot of staffing firms are staffing and getting into on many levels, right? From people that are doing packaging where it's legal and picking and growing to, companies that are hiring, temporary CFOs or people to work in their company. And so right now, if you are a cannabis company, if you're in a state where it's legal, you can't bank with the federal bank. You can't go in and bring in a deposit envelope at Citibank because it's against the law.
Yeah. And
so it's unsafe because you've got cash everywhere. You're putting your employees in danger by paying them in cash. So there are things that can go. So one of the things that the SAFE Act does is says, look, if you're in a state where the sale of cannabis, either medically or recreational, is legal, then you are allowed to interact with a federally chartered bank.
Yeah.
And that just seems like good sense. It, of course, gets caught up in politics.
Right.
But it would certainly, it's not going to surprise me if people start saying, let's look at alternate sources. Let's see what we can do to raise some money. I mean, obviously, that would be that would certainly generate a lot of buzz. It would certainly, that's a bad choice of words. It would generate a lot of discussion, a lot of debate.
Yeah.
But I do think as we climb out of this, that people realize they're going to have to look at new ways to increase revenue and close this tremendous deficit that we have had to undergo because of this pandemic.
Yeah. Now, a lot of the the things you touched on regarding medical cannabis, whether it be recreational or medical only, medicinal, it being, federally prohibited, can't do interstate, can't do FDIC, insured banks, all of that. I mean, I think it leads to a lot more potential negatives by keeping that sort of arbitrary boundary of federally and state, just because of sort of the chaotic uncertainty it creates, lumps of cash that you can't deposit among, one of the things there. But I in sort of my, I hate to say pessimistic, but it's certainly not utopian outlooks, with, technology, increased production, everything that we discussed, having a harder time finding access to the labor pool that we need. I think the addition of a burgeoning industry like cannabis could bode well. I think you're going to be able to, for the most part, what I've heard, the industry has not had a hard time attracting candidates. So if we could open that up, economic benefits, job opportunities. I'm in Arkansas, and in Arkansas, when they rolled it out, the voters approved it in the ballot 2016. Politics and bureaucracy at its finest didn't get rolled out till maybe 2018, and it is still tied up in lawsuits. And they issued a finite number, 32 dispensary licenses, 6 to 8, something like that, cultivation facilities for the entire state. And then months later, Oklahoma actually voted and approved it without all of the regulation we did it. They were going to let the markets decide and let oversaturate. And they have generated insanely larger amounts. They came to market after Arkansas, but just because of the way it was regulated and implemented and rolled out, they're already a blossoming industry in Oklahoma, and Arkansas still dragging our feet trying to get it going. So I do think there's something to be said for, responsible implementation. Of course, leave it up to the voters. It's their state, it's their lives, all that. But I think looking for sources of revenue and seeing things, I think cannabis will be a good source of revenue, as it has been for a lot of areas. Hopefully, a new area our industry could adapt and grow in. I'm interested in expanding markets and new markets, and where we can expand. So that's why we had put that down. And thank you for covering that with me.
I think the other area that's similar in some ways is the legalized sports gambling, right? States across the country are wrestling with that, whether they want to legalize sports gambling. Those that have done it, from what I've read and what I've heard, have certainly reaped the benefits of it.
Yeah.
From a financial standpoint, whether it's the selling of licenses, whether it's the increased traffic to places, whether it's the racetrack or just these kind of parlors that have split up. In DC, they legalized it in 2018, and so the big arena down there, which is Capital One Arena, has a restaurant. It's kind of like Vegas. It's almost like a sports book. And you go in, and there's a bar and there's a restaurant, and then you can bet on, any game in the country. And, obviously now it's not been a great time because DC's been very aggressive about crowd control during the coronavirus, but they are setting themselves up for a new stream of revenue. Not only, increasing the amount of business in the district, but increasing all the taxes that go with it. And certainly if you're going to legalize gambling like marijuana, you're going to know where things are happening, and you're going to be able to tax it. If people want to participate, then they can pay a tax on it, and that's going to be good for everybody.
Yeah, the overall economic impact it has, all the way down from judiciary, prosecution, et cetera, all the way up to those items are generally taxed at an increased rate as well. So
right.
They're generating more revenue than, say, an equivalent sell on toilet paper or some other product like that. So the multiplier is great there. Well, I know that we're coming up on the time we'd set aside, so we'll go ahead and shut it down. Do you have any closing words or?
Well, yeah, I mean, I think, first of all, thank you very much for having me. I thought this has been a really great opportunity to talk to you about these issues. And, I think regardless of what happens in Georgia in January, I think you're going to see a very closely divided Congress for the next 2 years, where things are really going to have to go through the ringer before they get, put into law. And I think, a lot of the beginning is still going to be focused on the coronavirus. I think you're going to see some things where, you may see a push for a national paid sick leave law. You may see a push for a $15 an hour minimum wage law, but again, those issues are going to have to be will be closely debated just because of the makeup of the legislature. And we talked about it in the very beginning of our conversation, I think as we hopefully with the vaccine, really start to turn the corner on this pandemic, we will see the staffing industry kind of lead the way from an employment perspective out of this economic downturn, getting people back to work safely, responsibly, in a way that, helps clients and helps cities and states start to rebuild from what we've all been suffering through for the past 9 months. So, I think it's a great industry, and I think it's going to do great things in the years ahead.
Awesome. Yeah, we certainly hopefully have the opportunity coming up on us in 2021. And I don't think there's any way that it'll be rougher than 2020. So hopefully we come out of this thing in the slingshot effect and can start working on rebuilding then.
Right. Absolutely.
All right, sir. I appreciate your time. Thanks for joining me today.
Thank you very much, Miles. I'll talk to you soon. Take care.
All right, man. See you, bud.
Thank you for listening. And now it's time to get back to work.